Hey, everybody. I hope you are doing well. My name is Buddy Blake, and I am in Wilmington, North Carolina. I am a real estate agent, and I am a team leader at the largest and most successful Coldwell Banker franchise in the entire United States, which is Coldwell Banker Seacoast Realty. And it is led by the owner who is hands on, Mr. Tim Milam, who I started doing business with back in 1998 and literally used to go on listing appointments with him because at that time he had 26 agents. Now, just in the southeastern coastline in Asheville and a few other places, he has approximately close to 1,000 agents, and then includes some other partnerships. He's got upwards of 2,000 agents. Anyway, long story short, I wanted to kind of bring up what's going on in the market a little bit. And I don't have a bunch of stats to show you. It's going to be a conversation, and I have got the headlines printed on real paper. So I am not overproducing this. I hope you're okay with that. This is not going to be a short conversation. I'm doing this on video, and it'll be on our podcast. So it'll be in our YouTube channel, in our Monday morning coffee emails that go out once every 2 weeks. And I am going to give a plug, compliments to Frank and his team at Viral Marketing. If you're in any business, they are the best at what they do. So they do an incredible job. They know what they're doing. They know the sequence that it needs to happen. They know how to do all the retargeting, the YouTube, the Google business, the maps, the Bing, and even the new Apple maps that are coming to bear with the very similar to Google My Business. So I want to give them a plug because they've been very good to me for a very long time. As I started with them for a long time, left them, and now I'm back with them. Anyway, I got a couple things. I come off, I used ChatGPT to help me with an outline, then I adjusted. And obviously yesterday, the Federal Reserve, it cut the interest rate, the short-term interest rate, a quarter point, which I will tell you is disappointing because a lot of folks had baked in the cake a hope of half a point, but they went with a quarter point. And that's going to be a problem. And keep in mind, that doesn't mean your mortgage rate's going to come down to that. What that means is that's your short-term borrowing. That's the everyday business that's borrowing money from a bank. That's the builder borrowing money from a bank. That's your equity line if you've got a HELOC or an equity line. It's all kinds of things that fluctuate. Sure, it got a little better, but it's been a year overdue because it got caught up in politics. And I'm not going to get into politics, but that whole process got into politics, no matter how you slice that thing. And it needs to be coming down much quicker. Now, we do expect to be seeing some interest rates. We're already seeing FHA, VA with a little bit of points and things like that into high fives. Personally, I know everybody, the gurus in the industry and people I know very well, want the best and want the best and want the best, but they've been saying it for 2 years and it hasn't happened. I'm not a naysayer, but I'm a realist. We're not going to get the rates down into the 3s and 2s ever. So take that out of your mind. That's not going to happen. If that was to happen, that means another pandemic, crisis, or war where the Federal Reserve and the government is going to start doing quantitative easing, and they're going to start buying mortgage-backed securities again. And while I would love that to happen because that would bring the rates down, all it would do is make the housing industry worse. So we're happy the Fed cut some, but I'm very disappointed that they weren't much more aggressive in this. And not just for the housing, but for the people that run businesses and they operate on credit lines and they need those to stay in business. Or for the family that's lost a job and they need to use that equity in their house that's built up over the last 5 years to get them through. That's the rates we're talking about. Yes, it trickles to the bond market, trickles to the long-term mortgage rates, but let me explain something. The rates aren't going to shift around right now because that was baked into cake. A quarter point was baked into cake. Some of the cakes had a half a point baked in them. So you may see interest rates rise a little bit in some cases. So I want to talk a little bit about kind of the forecast that what I see out there. And I'm going to put my little papers down for a minute and just kind of talk with you. I think that we're going to see some help for the housing industry. The government, President Trump has already signed some stuff, and we all know he's heading to a position where Fannie Mae and Freddie Mac is going to be privatized. That is their goal. I think that's a good thing because it is a cash cow for very little benefit for the consumer. It throws in things like PMI and all kinds of trash stuff that just all it does, it makes it worse for the homeowner. If that gets privatized, that's going to go and it's going to go on the open market and you can buy shares in it, which may or may not be a good investment. But you're going to see other players get into that game then. And then you're going to see some creative financing get involved with the situations. But one of the things that I'm encouraged and I'm worried about, the President Trump has said, hey, we've got a housing crisis, make housing great again. I think that's fantastic. But my fear is the fastest way for them to create affordable houses is not to help you and me as a general homeowner who owns a house now and help find a way for people to be able to afford our house. The fastest way for them to do that is to create incentives for home builders. And I'm not against that, but I'm not for it just being for them, where they open up lands where builders can go in and develop and could be developed cheaper. They cut some corners on some of the, guidelines. Now, first off, I think it's ridiculous the amount of regulations that are involved in doing a subdivision. And I'll tell you a little bit more personal story on that I'm doing right now that has been shocking and very expensive. But if they go to the national home builders, and that's where they're going to go because they got the biggest lobbyists, in my opinion, this is just my opinion, they're going to go out and create a whole bunch of inexpensive houses with incredible rates that you can buy houses for. And we're already seeing that. The big home builders are cutting their prices, slashing prices because they're sitting on too much inventory. They're offering to buy down rates, which the average homeowner that's trying to sell their home to move back with family, to move into that next stage of life where they want to get into independent living, to expand their family, to shrink the square footage, and make some moves. None of that's going to help you. It's hurting you. And we're seeing it. I did a podcast and an actual video that's going to come out on the next Monday Morning Coffee. You're going to see, I interviewed a good friend of mine, Chris Waters, who runs one of the highest producing real estate teams in Austin, Texas. And Austin, Texas, keep in mind, was one of the first markets that went nuts during COVID. And then came Florida, and then came Tennessee, and then came Georgia, and then came South Carolina, and of course, North Carolina. We're in it. The southeastern quadrants, and then Arizona as well, because everybody was moving out of California. Well, a lot of that's changed. A lot of the employers that are requiring people to move back to their offices, and in my opinion, I think that's great because I think people are more productive in the office working around other human beings, and I think it's unhealthy to not be around other human beings. Now, there may be some industries, there's no question, that can be done online. I don't doubt that. But for the most part, I think the more we're with other human beings that either align with us or maybe even we have a little disagreement with, the better we engage and learn and get to know each other. But with all that said, what's going to happen is you're seeing these markets, and in some cases, I'll give you an example. Chris was telling me in his market, he showed me statistics. In about an 18-month period, they went from 2,500 homes available in Austin, Texas. That's a big market, much bigger than ours here, to 18,000 houses available. Average days on market, 6 to 9 months. And what's happening is, first off, we went from a normal cost of a house or a normal value of a house of, say, 300,000. It jumped to 600,000. Well, what's happening now is pulling back, and there's 20 to 40% difference. So, and everybody's freaking out. The sellers are freaking out because their neighbor got whatever 2 years ago. Well, those days are gone. You should have sold 2 years ago. Here's the good news. You're still way above what you should have or would have in a normal market equity in your house. And if it's your primary residence, there's a good chance it's all tax-free. Speak with your accountant on that. So they're seeing that, and it's a lot of hard conversations with sellers, homeowners, and now, and I can tell you from my world, our number of listings have increased, not to the level theirs has. Our days on market are increasing, and there's a polarity. There's some houses, I'll give you an example, and it's price range driven here. Just yesterday, the local board of realtors came out with some statistics and said, oh, house prices in our market are up, blah, blah, blah. Well, I took last night and segmented it. If it's a house under 500,000, the prices are down significantly. If it's a price between 500 and $1 million, they're down somewhat. Over $1 million are up. And that's the discretionary buyers. We have a lot of beach areas like Figure 8 and Wrightsville Beach where it's a different kind of money moving in here. They're buying $20 million houses and they're not worried about the interest rates. And they just want what they want. It's a different world that has moved in to our area, much due to COVID. It started then. We've always had the Northeast quadrant, but now we have the West Coast quadrant, which the money you guys have out there, if you're listening to me from California, it's just absolutely ridiculous, the things that you spend money on and that you'll buy. But hey, I'm in the business of selling houses. We sell houses. But I'm more concerned about, I'm from Wilmington, lived here my whole life. I'm more concerned about the regular person that has done everything right. They bought a house, they've gained their appreciation, and now they want to sell, but they're not getting what they want. It's taking longer than they expected. And then what they want to buy, they're going to have to drive 10, 15 miles outside of town to get it. And people are doing that. When we're sitting down with a home seller, we're not just showing them comps, what sold in the last 3 to 6 months in your neighborhood, because people aren't focusing on neighborhoods unless it's a unique situation like they were. A buyer coming to our market, they're looking at the cost, the price, the overhead, and they can go all the way to Calabash. They can go to Holly Ridge. They can go to a whole lot of places, and they can buy the same size house, the same quality house, basically, that would cost here $400,000 for $250,000, $260,000, and then the the builders are throwing in. They'll buy your rates down to 4.99% or 4%, which, quite honestly, is you may want to be careful with that, because if rates do get into the fives, the spread on that may not be worth the juice or the squeeze of the juice over the long haul, unless you plan to live there for 30 years. So I come to you with a little bit of a pessimistic, because everybody else is all rose-colored glasses, thinks it's going to get, if we get in the fives, the market's going to go on fire. Is it going to get improved? Yes. But the truth of the matter is, we're going to be competing. When I say we, I mean resale homeowners. We're going to be competing with new construction more than we already have. I've got a few listings, just the most lovely people on earth. They've done everything we asked. They came out high. On one occasion, I actually made the mistake because I thought we could get more. And a lot of times as a realtor, I'm going to tell you right now, my heart says this, but my logic says this. And sometimes I go with my heart and I make a mistake. And then if you come out too high, you make a huge mistake. Whereas before, you take what's out there, you go a little higher, you hope negotiate into it. Whereas now, the absolute best strategy you can do is if everything else is selling for 400,000, if they can go 10 or 15 miles, and you need to understand, they will go that far now to get the right price and the right house. If they can do that, you better be under them, because otherwise you're going to have a lot of days on market. You're going to have less qualified buyers because the buyers that are offering are going to be, more challenging. And also, when you come to a home inspection, when that buyer knows your house has been sitting on the market for 3 months or 2 months or whatever, that basically tells them nobody else wanted it except them. So they're nervous about buying it. And then they're going to beat you up on home inspection more than if they had somebody else in the wings they knew that would buy it right away. And we've done that. Like, I'll give you an example. We've got 4 cases in one neighborhood. It's called Mott's Landing, resales. 2 of them are townhomes in there. 2 of them are single family. We put them on the market, and the sellers were wonderful. They had bought it right, owned it for a long time. They're moving to be closer to family, most of them. And what they did is they're like, listen, we don't want to be greedy. We want to get a fair price, but we want our house to sell in 30, 60 days. So we told them the price they need to be under the market a little bit to get strong offers. Well, we got multiple offers on every single one of those houses, and they're in the 6 to 8 range. Okay. So it worked. Not only that, but we have very easy negotiations on the home inspections because the buyers knew there were other buyers interested. So they wasn't asking for ticky-tack things. So with that said, if you're selling a house right now, you got to really look what's out there 10 to 15 miles out and what a buyer can buy. And we give complete spreadsheets. And I mean, in one case, I met with some folks the other day, and there were 67 houses. 40 of them were new construction somebody could buy. Very similar price range, very similar house setup. And I know all of us as sellers thinks our house is better than everybody else's. I get it. Okay. I was in a house yesterday, and wonderful people, and they made the comment. I asked them, I said, what's your goal? What do you want to net out of this house? And they were like, well, you're the pro. You should come up with that. And well, you know what? I make suggestions, but I don't set the price. You do. And it works so much better if you tell me what you're trying to get net, and then let me work backwards into that and try to make that happen. Because then we're going to have conversations about, in my world, and this is just me, I can't speak, there is no standard in commissions, because if somebody will price their house a little below the market so that we can get multiple offers, hopefully, or at least multiple people interested, and better offers, cash offers, 3 of the 4 that I mentioned in that one neighborhood are cash offers, okay? And if we could get folks to do that, we're going to be a little bit more flexible in our commission, because we know that we're not going to have to market it for months and months and months. And whether you realize it or not, when we go to put a house on the market, we don't just put signs up and put it in MLS. Now, some agents do. We got professional photos. We got all these different things. But now we're doing Zillow stuff that costs every month. We're doing Realtor.com. I mean, those beasts, what you don't realize as a consumer, are creating leads and selling them back to agents. So when you go look at something, fill out stuff, they are selling those back to agents, and they're collecting a large portion, up to 40, 50% of the commission as referral fees back. So understand that the cost for a real estate agent, listing agent, has gone up dramatically in today's world. And to do it right, which we are not going to do it wrong. We just don't. We measure every house professionally. We want to do everything because I'm liable for that. I run a team, and we all do it the same way. And we communicate with our people every week or 2. I've not done a good job on a couple of them because I don't have good news. And I'm just like nobody else. If I got no good news, I don't want to give people bad news or keep beating them up over the price. And I've got to get better at that because this market has changed back into that. So I think that the market is shifting, but it's a different dynamic than we've ever had before, because you as a homeowner, you aren't competing just with people selling used houses in your neighborhood. You're competing with a 10 to 20 mile radius, and you're competing with builders that you're going to have a hard time. Even if it's a fill in the blank national builder, that's quality is suspicious at best among a lot of people, you're still going to lose because they're going to buy down the rate and they're going to give them all these closing costs. I mean, they're going to give them epoxy floors, put fences in. I saw one place, they were offering a car at one time. Things that normal people can't do. And I'll give you an example. They're offering to pay the buyer's agent, in some cases, 6% commission, okay, just to help get more activity. So there's a lot of things going on, and you need to understand that. It's not doomsday because you've made a ridiculous, just like I have. I run the numbers on my house. I'll tell you what I paid. I paid $575,000 for my house in 2018 in Plantation Landing, which is up near Scotts Hill, Porter's Neck area. I told my wife, I said, you better love this house because we're going to be here forever because we're paying way more than we should. We actually bought it for sale by owner because there was no other houses in that market. And we fell in love with that house, or my wife fell in love with that house. And it's been a great house. We could sell that house for somewhere between $900,000 and $1 million right now. We should, in 5 years or 6 years, we should have only been able to increase our equity about $100,000, but it's doubled. And we could sell it pretty quickly. Now, we probably could have got over $1 million 2 years ago, but we're probably in the 8 range now. But our deal is we're close to where we send our kids to, if you're local, to Wilmington Christian Academy. It's where I graduated. And we want to be close to I-140 because we can be there in 12 minutes versus fighting the traffic of, Wilmington or any city these days. And if you complain about Wilmington, just go to some of the other cities. We have wonderful traffic compared to them. It's not like it was when I grew up here. I used to ride my bike on Longleaf Acres. I used to ride my bike to the beach, boogie board all day, go to the Palm Room, spend 50 cents on French fries and ketchup and a soda, and had the time of my life. That was my life growing up until it became work age. And then my dad owned a television store, a rent-to-own store, and video store. So I ended up doing collections in places, if you've ever heard of Nesbitt Court, different areas of town. And I learned how to do collections, which is great. I met some incredible people, still see them today, which is really cool, and been able to serve them, selling them houses or helping them sell their houses. But so I want to just kind of focus on that a little bit. What you're hearing in the media and what we're hearing for our industry gurus, when you start slicing it apart, it ain't exactly what's going on. And it's certainly not exactly what's going on with the consumer. Because I'm going to give you an example. We have a team of about 8 agents. We have over 50,000 people that have registered on our website that are looking at homes or keeping up with the value of their homes. Because with freehousevalue.com, which we own, and we have not released it nationally, but we will be releasing it nationally so that other agents in other areas can utilize it, because it allows a consumer to go enter their address, not enter a phone number, not enter anything else unless they want to, and it'll tell you what Zillow says. Then it's going to tell you what another AI version says, which I will tell you is usually lower because it's more conservative and it's really more likely. Then it's going to start telling you some other information about, hey, make sure you got your replacement value on your insurance correct. Because guess what? If your house went with the building costs, if you got a house that was built and it was worth $400,000 it's probably going to cost $600 to build that house again. But then it also shows you at the bottom a really cool statistic that assuming that, let's just assuming you 20% capital gains you would normally pay on anything you bought and held for a year, by living in your house for 2 or more years, 2 out of the last 5 years, according to an accountant, of course, you pay no taxes. So it actually tells you, like in my case, I would normally pay $57,000 if I sold my house now, if it wasn't for the primary tax savings. But so you got to add that on to what you made too in your head, because that might not be around forever, because that's a big ticket. And as the government's budget gets worse and worse, don't think that some administration now or in the future is going to look at that and they're going to try to take that away. Everybody says, no, it's never going to happen, never going to happen. But there's too much money there to not look at. I'm just telling you. So let's see. Predictions, ignore them. It's a great time to sell your house if you have a concept of where you're going. Now, I will tell you, met with some folks yesterday. They got a great plan. They're going to sell their house. They're going to take the equity out of their house. It's going to sell quick. Beautiful house. As soon as we put it on the market, it is gone. It's in Ogden. It's gone. And they've done an amazing job. They're going to go down to Calabash and they're going to buy a brand new house, smaller, in a neighborhood with amenities, with sidewalks, smaller yard they don't have to maintain. And it's going to have all new everything, new warranties. And it's a nice neighborhood. It's actually built by one of our favorite builders, which is Logan Builders around here. If the bigger builders, my favorite builder is Pyramid Homes in Windsor Park, but we are only 4 houses away from being done there after selling 900 homes. So this person's going to go down there. They're going to take and put a whole bunch of money in the bank, and it's going to draw 4 to 5% interest. And, so they're going to get a brand new house, take the money off, tax-free, and go in there, and they're going to start drawing money a year. They're going to draw $400 or $500 a year off the equity after buying a house for cash. So that's a great plan. The other plans we're seeing is people that are moving back to family. They can't afford assisted living or independent living or whatever you want to call it, because it's, some places like, I'm not going to name a name. You got to write a check for $600,000 just to walk in the door and then pay $5,000 a month. Well, sounds great, but I can't do it. And I sell a lot of houses, and I could have done better. I've made a lot of mistakes, but I haven't done horrible. So I couldn't do that, especially with 3 teenage daughters and a wonderful wife that grounds me, by the way, so much. But I think that you have to look at why you're moving. Now, some people are starting to lose their jobs and they're needing to move. Some people are getting transferred. They're needing to move. Now, I will tell you another tool that we are leaning into, and I'm not hearing anybody talk about this. We've got 3 going right now, loan assumptions. VA and FHA loans are assumable. And FHA loans, even though you signed on the CD and it said non-assumable, don't go by that, because they are assumable. They're easy. You don't have to have appraisals. They're actually, the qualifications are way easier than if you were to go get a loan. So we've got one couple that is buying a house. The people bought it 2 years ago. They're getting stationed somewhere else in the world. They're military. And another VA, it wants to buy it. There's not a lot of equity there because the prices have either flatlined or gone down in many cases. And in this area, they've actually gone down. They're going to be able to assume a 2.99% interest rate loan. And their payment on a $600,000 house, and their payment is going to be what, if they were to buy a house now, would be what a $300,000 house would be. So they're going to be able to buy something that just wouldn't be feasible. So you need to understand, one of the first questions I would ask my realtor is, can you find out if it's an FHA loan or a VA loan? Now, we have tools to do that. FreeHouseValue.com, for example, tells us if it's a VA or an FHA loan. You can go online, register deeds, get an attorney to look and see if the deed of trust says it is. Because that's the mechanism that says whether it's assumable or not. So think about those things because it really matters. Now, flip it over. If you're a seller and you've got a house and you've got a VA or a FHA loan on it, well, guess what? That becomes a marketing tool. You may be able to get a little more money, and certainly you're going to sell your house easier if you've got somebody that qualifies to do that. VA loans are a little tricky because ideally it's another person that has a VA qualification that buys it, because otherwise the person's selling and hangs it up so they can't use their VA certification until that is paid off. So ideally, but fortunately we live in an area there's a lot of military or veterans, and it qualifies, and it's fantastic. So make sure you're talking to a lender and a realtor that gets it. Highly recommend talking to a few different realtors and a few different lenders, because some people do. There's lenders that do great things. There's lenders that do other things great. And there's realtors that do, like, for instance, if you called me and said, hey, I got a house at Figure 8 Island or at Wrightsville Beach, I'm probably not your guy. I'm a meat and potatoes guy. I'm probably $2 million and under is where my sweet spot is. Most of my homes are between $300,000 and $900,000. That's where I like to operate, because I found that quite honestly, they're the nicest people and the easiest people to deal with, and they respect you more. That's just me. It's just what I've found. The other thing I wanted to bring up is I'm going to give you a real world example on something that, when I have a conversation with one of our current clients or somebody we're thinking about, working together to sell their home, I'm very honest about what the price is. And we have a team of agents. The agents also list homes. A lot of times, if they're newer or if the customer wants me to, I'll go with them, because we work as a team. We literally sit down every morning and have a huddle. And we have a board that has all our listings. We have another board that has all our contracts that are pending. And on all our listings, we pray for a buyer for that by name. So we go through that because our team, we run by faith. And yes, it's been a tough time with all of the stuff that's happened in the last week or so, but I'm encouraged by it because I see an awful lot of people with diverse opinions and diverse ideology coming together with the common morality. Wherever they get their morality, I know where I get mine from, but whatever it is, that there's just some things wrong, okay? Like or not like somebody, there's just some things wrong. And it's really neat seeing some people come together on that. But I'm going to give you an example. I've got a neighborhood called Pine Ridge. It's in Castle Hayne, 9 lots. A year and a half ago, we started this thing, but because of county regulations, county delays, county whatever changes they threw at us at the last minute, us having to pay a tremendous amount of money to get water and sewer, what should have been $60,000 lots when we started turned into $110,000 lots. And that has nothing to do with anything other than regulation and forcing us to run the sewer and water line when we weren't supposed to run the water and sewer line. And then they connect on and they go on down the road, and then they connect to somebody else and charge them impact fees. Now I get the wonderful luxury of going, because we got 2 more houses we're getting ready to bring in. I got to go pay almost upwards of $10,000 impact fees to just to connect on to something that we paid to run there. So with that said, when we started this community, there were 6 houses a year and a half ago in the Hanover County, used, new, whatever. There were 6 houses outside of the downtown fix-up stuff, historic stuff. That's a different world, different buyer set, different setup. There were 6 houses in Hanover County under $400,000. Well, now there's hundreds and hundreds. So what was a great idea that we started, because we brought in the nicest, really nice manufactured homes, nicer than what a lot of stick builts are built. 9-foot ceilings, drywall, metal roofs. I mean, everything, 2x6 exterior walls, which no stick built builder builds that unless you pay high-end custom. I mean, high-end appliances, high-end everything. And we had them 325, 350, where that was going to work. Well, didn't work. So we're having to do what the builder's doing. We're having to cut prices, and we have. And on our last 5 lots that we've got in there, we're going to have to bring in a different product. And it's been a struggle. And that's what's happening in the market. So when I sit down with a seller and we have a conversation, you need to reduce your price. I'm like, listen, between there and a couple other places of these I got 7 houses for sale right now. And I am literally, my strategy is I change the price every 2 days. And I'll move it down. Sometimes I move it up. Sometimes I move it down. I'm moving it. And the reason I'm moving it is I will work with an offer. Because some people rather pay cash the lowest price. Some people need help buying their interest rate down. I want to be able to do either. I can go either way. Doesn't matter. But I need it to appraise. So I need to keep the price a certain level. So I think that it's been eye-opening to me. But by owning the properties myself, I'm able to do some things strategically that no seller on earth, if I told them that, they'd think I was crazy. But I move the prices every few days. Because every time I do it, it goes out to thousands of people on Zillow, thousands of people on Realtor.com, tens of thousands of people on different websites like mine. I got 50,000 people it goes out to. And they see a price reduction. They might see a price increase, but they see it's the hot list. And that's the strategies that we're working on. And another strategy is, everybody wants open houses. I don't love open houses because I don't know who's walking in the door. Because at least if they're with the buyer's agent, they've been pre-approved or, they've been checked out with the app we call Forewarn. We can tell if they got a criminal record, if they're walking in the door, because bad things do happen to realtors sometimes. But we are moving into a mode that I did 15 years ago. Some of you may remember when I did the guaranteed sale. We're not doing that again because my fear of doing that again is I could get stuck with some houses because I'm fearful that if these rates don't come down really soon in the next 3 to 6 months, that our prices could fall significantly again. And because we're no better than Austin, Texas. They got a lot more jobs than we do. And we're no better than lots of parts of Florida. They got a lot more retirees with a lot more money than we do. We're no better than Tennessee. They got a lot more jobs than we got. So in the coastal Wilmington area. So I am going to continue to work that. And we're going to start doing open houses differently. We're going to be deploying the agents, especially newer agents who need to build their business, et cetera, of our team. We're going to start deploying them during the week and other places, especially in vacant houses, because it's easier. We don't have to ask people to leave, into the houses to do open houses during the week, not just on weekends, because more serious buyers look during the week than on the weekends, believe it or not. A buyer that looks at your house through the week has a significant more chance of buying your house, likelihood of buying your house, than somebody looking at it on Saturday. So this is really why we're doing this. We're doing this to be different. I mean, obviously, if we're in a neighborhood, we're going to stand a better chance with neighbors thinking that, we do things differently, which we do. I've always done things quite differently. Guaranteed sale, we've done all kinds of things. We've done trade-in programs. We've done a lot of new home stuff over the years. But now we're finding ourselves in a different world. It's not impossible. It's just going to eliminate an awful lot of real estate agents and mortgage brokers. I don't know if you read the stat last year. I don't know how accurate it is, but 74% of the agents didn't sell a house. So, and I think that comes from buyers and sellers are really leaning into experience. And personally, I think the best way to run a real estate business is to be under an amazing company like ours. We're under just the best company. probably in the country. And it's because of the locally owned and operated person. It's not necessarily the brand, by no means. There's lots of arguments that a lot of people have around that. But, what I want you to take away from this is to sell your house, you got to do things differently. You've got to price properly, have a strategy. You got to move prices around so you can stay top of mind. You got to be prepared to do that. You've got to give some authorization. In our case, we ask for you to give us a little bit of latitude and authorization to move some prices around so that we can keep you top of mind. We work through that. And then we're going to have to get through obviously the new home wave. We're going to see a new home wave if the federal government gets involved and gives incentives for that. Great for the builders, but for folks that need to sell their houses, it's going to make it more challenging. I told you my story about my own situation I got going on, so I'm speaking the same language you are. I've got one or two properties I'm going to lose money on. It's complete inverted. But I'd rather do that now and go forward and use and deploy that money elsewhere, because I believe personally there's going to be some opportunities to buy some really good values down the road. And that doesn't mean it's going to hurt the seller because they've made money. It's just they might not make $300,000 in 4 years, but they might make $200,000 in 4 years, which is ridiculous if you really, really think about it. Other things we're doing, we are leaning into new marketing approaches. We're spending a tremendous amount of energy on Google. We're also spending energy on Google My Business, which is maps. Apple just released their own version. We're already in that. We're in the beta test on that. We're beta testing the new Bing approach. Homes.com, we've tried. They just can't get their act together. They just are more interested in spending a lot of money on ads that make no sense. We're spending a lot of money with Zillow, with properties that are fitting. We do the Zillow showcase. We're spending money on that. And in case you guys don't know, it's really weird the way they do that, because they put it up there when you do your Zestimate. It says, oh, if you put a Zillow showcase on there, you're going to get 2% more for your house. Well, I'm just going to tell you, we do it to satisfy our sellers. We have yet to see that. Okay. I'm just going to tell you that. But it helps Zillow sell things. And they really like to, sell things to us. Nothing against Zillow. They outmarketed the real estate industry. The real estate industry used to own Realtor.com, and Realtor.com, while it's certainly okay, Zillow kicked their butts when it comes to marketing. Other things are, so I'm going to leave you with this. If you're a praying person like I am, certainly I want to say this after the last week or so: pray for our country. Pray for the families that were involved. On all sides. All sides. Horrible for just all sides. And I would say pray for some wisdom for our leadership. Love him or hate him, he's our president and his staff. We pray that there's wisdom there. And just keep in mind that if you do believe in the Bible, there was a king called Nebuchadnezzar that God used for amazing things with Daniel. And good things happened through him. It ended up poorly for him, but he used them. So God uses everything, I do believe. Quick roundup. The experts say we're going to have a big pickup. Market's going to go crazy, and prices are going to go up, and interest rates are going to fly down. And I am rooting for that. Okay. So we are rooting for that. But be prepared if that does not happen, and understand that the fastest way for the federal government to get the housing market with affordable housing is through new construction, by giving incredible discounts and incentives to these huge corporations so they can come in and just build on land that and just build and build and build and build in tens of hundreds of thousands, millions of homes, and which is fine. But understand that you're not going to be able to compete with that. Yes, we can argue quality all day long, but at the end of the day, when somebody goes to a car lot, if for the same money, or even less now, actually, you can buy a new house for cheaper than you can buy a resale. In many cases, they're going to go with the new construction, especially if there's incentives and extra warranties and amenities and all that. So, really long message today. So, kudos to you if you made it through. Shoot me an email. Let me know you did make it through. This will also be on our podcast. But I just wanted to share some thoughts with you straight from what we deal with every single day. I mean, we are working harder, our team is, than we ever have. I walk through numerous real estate offices here and abroad. I go to San Diego beginning of October for a mastermind, and with other comrades that are in the same business, and they're seeing the same things. A lot of people are just hoping that things will improve, but you can't rely on that. You got to go work. And we are big believers in going to work and building relationships, reaching out to people, having phone calls with them, not spamming them, but having phone calls with them, meeting them, being patient with them, realizing they may not be ready to go. They don't know where they're going. They don't know how to get there. And it's our job to take each individual situation and find a pathway for them to make their next move, whatever that may be. And we've got a lot of creative financing we can get done. I'll give you an example of the stuff that I'm doing in Castle Hayne and Rose Hill. We're offering buy-down rates. We'll give you all kinds of different things that, because we want to move through the inventory and we want to pull our money out of it. Because keep in mind, we pay banks loans at high interest rates, higher than your mortgage rates, because they're they're commercial loans. So our goal is to move through them too. And we're not going to give them away, but there's opportunities there. So we're kind of like the builders. It's just we don't have the kind of resources and the money, and we're never going to get the credits and the federal government and state governments and county governments to give us the money. Like, we've tried for a year to get our local county to help us with some credits, or even get water and sewer ran to us without paying hundreds of thousands of dollars to do it, so we can build affordable housing. And that didn't happen. Anyway, thanks a lot. Have a great week. I am not a doomsayer. By no means. I'm a realist. Nobody is rooting for a market shift more than me, because I'll make a lot more money, and I'll be 60 next year. And I figure I got a good 15, 20 years in me. I got 3 teenage girls, so I got to. And, I'd love for that to happen. But I also think we need to be prudent and be prepared for if it doesn't happen, because I've heard this story for the last 2 years that it's going to happen. So I hope it's right, but be prepared for it to not. Sky's not falling. It's not the end of the world. We've all made unbelievable money if you bought your house before 2021. So money that it usually takes decades to make. So you're in good shape. So anyway, thanks a lot. Talking to you soon. Please give me some feedback. Let me know your thoughts. And just God bless you and your family and our country.